Trading Terminology Part 5. IPO, Initial Public Offering. An IPO, or initial public offering, is a process by which a private company offers its shares to the public for the first time by listing them on a stock exchange. It marks the transition from a privately owned company to a publicly traded one. Why do companies go public? Raise capital. Companies raise funds by selling shares, which can be used for business expansion, acquisitions, or paying off debt. Increased visibility. Going public enhances a company's visibility and credibility, helping it attract customers, partners, and media attention. Liquidity for shareholders. Founders, employees, and early investors gain the opportunity to sell or cash out part of their holdings. Trend. In trading, a trend refers to the general direction in which the price of a financial asset, such as a stock, commodity, or currency, is moving over time. It's a core concept in technical analysis, helping traders decide when to buy, sell, or hold. Types of market trends. Uptrend. The price moves higher over time, forming higher highs and higher lows. Indicates positive sentiment and is often seen as a buying opportunity. Downtrend. The price moves lower over time, forming lower highs and lower lows. Reflects negative sentiment and is often seen as a selling opportunity. Sideways. The price moves within a range, without clear upward or downward direction. Signals indecision in the market and often suggests traders should wait for a breakout. Types of market. 1. Bull market. A bull market occurs when asset prices are rising or are expected to rise. It is marked by widespread optimism, strong investor confidence, and upward momentum in the market. 2. Bear market. A bear market is defined by falling asset prices or the expectation of a decline. It is typically accompanied by investor pessimism, fear, and reduced confidence. 3. Sideways market. A sideways market is one where prices move within a defined range without a significant uptrend or downtrend. It indicates indecision and lack of clear direction. 4. Trending market. A trending market is characterized by prices moving consistently in one direction, either upward in an uptrend or downward in a downtrend. 5. Volatile market. A volatile market experiences large and rapid price swings over short periods, often triggered by unexpected news, events, or economic data, leading to increased uncertainty and trading activity. 6. Thinly traded market. A thinly traded market is one where trading volume is low. This often leads to wider bid-ask spread, slippage, and erratic price movements, making it riskier for traders. Quick summary. Bull market. Prices are rising, investor optimism. Good for buying opportunities. Bear market. Prices are falling. Investor fear. Short selling opportunities. Sideways market. Prices move within a range. Ideal for range-bound strategies. Trending market. Prices move consistently in one direction. Follow the trend. Volatile market. Large price swings. High risk and high reward potential. Thinly traded market. Low volume. Erratic price action and higher trading risks.